Did you know that student loan debt in the United States has surpassed $1.6 trillion, making it the second highest consumer debt category after mortgages? Many individuals find themselves burdened by student loan payments long after graduation, impacting their financial freedom and future plans. In this video, we'll explore practical strategies for managing and repaying student loans efficiently. Welcome to our guide about student loans and strategies for efficient repayment. Understanding student loan. A student loan is money that you borrow to pay for college, and later on, when you're working, you pay it back. There are mainly two types of student loans: federal loans and private loans. Federal loans are like a helping hand from the government. They usually have lower interest rates, which mean the extra money you pay back is less. They also give you options, like if you're having a hard time finding a job, they might let you pay less each month until you get on your feet. Private loans are different. They're like borrowing money from a bank or a company. They might ask for a higher interest rate, and they're not as flexible if you run into trouble paying them back. So it's like choosing between a friend who gives you some leeway and someone who's a bit stricter. Assessing your loan situation. All right, let's talk about how to check up on your student loans. Think of it like looking under the hood of a car. You want to know exactly what's going on with what you owe. First, you need to figure out the total amount you borrowed. It's not just the money you got, it's also the interest that's been added over time. You can find this number on your loan statements or by logging into your loan servicer's website. Next, look at the interest rates. These rates can be tricky because they change how much you'll pay back in the long run. If you have multiple loans, each one might have a different rate. Write them all down so you can see which ones are charging you more. Now let's talk about when you need to start paying back the loan. There's usually a grace period after you graduate, like a timeout where you don't have to pay yet. This could be 6 months or more, but it's different for each loan. Mark your calendar for when your first payment is due so it doesn't sneak up on you. Lastly, there are tools and resources to help you with all this. Your school's financial aid office is a good place to start. They can help you understand your loans and give you advice. There are also online calculators that can show you how different payment plans will affect your budget. Knowing all this stuff about your loans is like having a map when you're on a road trip. It helps you plan the best route to get to where you want to be without any unwanted surprises along the way. So take the time to assess your loan situation and you'll be in a much better place to handle it. Strategies for repayment. When it comes to paying back student loans, there are some smart moves you can make to get out of debt faster. Dive into some strategies that can help you become debt-free. Number 1. Debt snowball versus debt avalanche. Imagine you're trying to get rid of a bunch of snowballs, your loans. With the debt snowball method, you start with the smallest snowball and throw it out first. You pay the minimum on all your loans, but you throw extra cash at the smallest one until it's gone. Then you move to the next smallest and so on. It's great for quick wins and can keep you motivated. Now, the debt avalanche is like dealing with an avalanche from the top. You tackle the loans with the highest interest rates first, regardless of the balance. This way, you might not see quick results, but you'll save more money in the long run because you're cutting down the high interest debt first. Number 2. Refinancing and consolidation. Refinancing is when you take out a new loan with a lower interest rate to pay off your old loans. It's like trading in an old, beat-up car for a newer model with better mileage. Consolidation is when you combine all your loans into one big loan. It's like putting all your clothes into one big suitcase. It can make things simpler, but it doesn't always save you money, so you have to be careful. Number 3. Making extra payments and bi-weekly payments. If you can, try to pay a little extra on your loans each month. Even a small amount can make a big difference over time. And if you switch to bi-weekly payments, you'll make one extra payment each year without even feeling it. It's like finding a little extra change in your pocket and putting it to good use. Number 4. Loan forgiveness and income-driven repayment plans. Some jobs, like teaching or public service, might let you off the hook for some of your loans after a certain number of years. It's like working hard at a job and then getting a bonus. Income-driven plans adjust your payments based on how much money you make. If you're not making a lot, your payments go down, which can really help when you're just starting out. Budgeting tips. Now let's talk about budgeting. Look at where your money goes each month and see where you can cut back. Maybe you can make coffee at home instead of buying it, or walk instead of taking the bus. Every little bit you save can go towards your loans. It's like filling up a piggy bank. Over time, those coins add up. The key is to stay consistent and keep your eyes on the prize. A life free of student loan debt. It might take some sacrifice now, but it'll be worth it when you make that last payment and can say you're officially debt-free. Avoiding common pitfalls. When you're dealing with student loans, it's easy to slip up if you're not careful. One common mistake is missing payments. Life gets busy and it's easy to forget, but missing payments can lead to trouble. It's like forgetting to water a plant. Do it too often and the plant will wither. Your loan health can take a hit with late fees, and it can even hurt your credit score. which is a big deal because it affects your ability to borrow money in the future. Ignoring the details of your loan is another mistake. It's like signing up for a marathon without knowing how long it is. You need to know your interest rate, your balance, and your repayment plan. If you don't, you might end up paying more than you need to. Now, if you stop paying your loans entirely, that's called defaulting, and it's serious. It's like letting a small cut get infected instead of putting a bandage on it. The government can take your tax refund or part of your paycheck, and you could end up paying huge extra costs. To stay on track, you've got to keep yourself motivated. Set small goals, like paying a bit extra each month. Celebrate when you reach these goals. It's like giving yourself a high five for a job well done. And always remember why you're doing this: to be free of debt and to have a brighter financial future. Keep that picture in your mind, and it'll help you stick to your plan. And there you have it, a roadmap to tackling your student loans with confidence. Now it's your turn to take these strategies and put them into action. Start by assessing your loans, then pick a repayment strategy that suits your life. Keep an eye out for pitfalls and stay motivated on your journey to becoming debt-free. If you found this video helpful, hit that subscribe button. Share your own loan repayment stories or questions in the comments below. Let's support each other in this challenge. Together, we can turn the tide on student debt. Thanks for watching, and I'll see you in the next video.